Every 3 months, companies share their report card. This is called a quarterly result. Think of it like checking your progress in school, but for businesses. These results tell us how much money a company made, or profit, and how much it earned, which we call revenue. We also learn about dividends. Those are payments to shareholders, and other important announcements. These updates help investors decide if they should buy, hold, or sell a company's stock. Exciting, right? Bajaj Finance, one of India's most prominent and trusted financial companies, delivered an outstanding performance in the fourth quarter of 2025, once again proving its leadership in the industry. The company's robust business model and strategic decisions have helped it consistently outperform expectations, even in a competitive market. Their net profit soared by an impressive 17% compared to the previous year, reaching a remarkable 4,480 crore rupees. This significant jump highlights the company's ability to generate strong earnings and maintain steady growth, much to the delight of its stakeholders. But the good news doesn't stop there. Bajaj Finance also surprised the market by announcing a bonus share issue along with a stock split, both of which are moves designed to reward loyal investors and attract new ones. With these changes, existing investors will receive additional shares, making their holdings more valuable, while the lower share price after the split makes it easier for new investors to buy in and participate in the company's future growth. And as if that wasn't enough, Bajaj Finance declared a generous dividend of 56 rupees per share, including a special one-time reward, further sharing its success with shareholders and reinforcing its commitment to rewarding those who believe in the company. All these positive developments have created a wave of excitement among investors, sending Bajaj Finance's stock price soaring and cementing its reputation as a top performer in the financial sector. Trent, the parent company behind well-known retail chains like Westside and Zudio, encountered a series of challenges during the fourth quarter of the year. These challenges tested the company's resilience and adaptability in a rapidly changing retail environment, where consumer preferences and market dynamics are constantly evolving. One of the most significant hurdles was a sharp dip in profit, which fell by 46%. This decline was largely due to a one-time gain that had boosted profits in the previous year, making this year's numbers look comparatively weaker. Despite this, the underlying business remained strong. In fact, Trent's revenue continued its upward trajectory, growing by an impressive 29% compared to the same period last year. This growth highlights the company's ability to attract more customers and drive higher sales, even in the face of temporary setbacks. To further demonstrate its commitment to shareholders, Trent announced a dividend of 5 rupees per share. This move not only rewards loyal investors, but also signals confidence in the company's long-term prospects and financial stability. Despite the drop in profit, Trent's overall performance was viewed positively by analysts and investors alike. The company's leadership remains focused on sustainable growth and operational excellence, ensuring that short-term challenges do not derail their long-term vision. Trent is actively expanding its network of stores, opening new locations in key markets, and enhancing the shopping experience for customers. This expansion is expected to attract even more shoppers and strengthen the company's position in the competitive retail sector. The market responded enthusiastically to these developments, with Trent's stock price rising by almost 6% after the results were announced. This positive momentum reflects growing investor confidence in the company's future growth and ability to navigate challenges successfully. Ambuja Cements, one of India's leading cement manufacturers, reported a 9% decline in profit for the fourth quarter, surprising many investors and analysts who had expected a stronger performance this season. The primary reason behind this dip was a significant increase in input costs, especially the prices of raw materials and energy, which have been on the rise across the industry. Despite these challenges, Ambuja Cements maintained its commitment to shareholders by announcing a dividend of 2 rupees per share, signaling confidence in its long-term growth and stability. Nevertheless, the market reacted cautiously, and the company's stock price dipped slightly after the results were made public, reflecting investor concerns about future profitability. In a similar trend, Bharat Petroleum Corporation Limited, or BPCL, a major player in oil refining and marketing, faced a sharp 24% drop in profit for the same quarter, which was a notable setback for the company. This decline was largely attributed to the volatility in global crude oil prices, which have been fluctuating unpredictably and impacting the company's margins. Still, BPCL chose to reward its shareholders by declaring a dividend of 5 rupees per share, demonstrating resilience and a focus on maintaining investor trust even in challenging times. Jana Small Finance Bank faced a tough quarter, with its profit plummeting by 62%. This decline was attributed to a rise in bad loans. This news worried investors, and the stock price reacted negatively. On a brighter note, IndiaMart, an online marketplace connecting buyers and sellers, reported an impressive 81% jump in profit. They also announced a dividend of 30 rupees per share, rewarding their shareholders for their trust. Quarterly results are like a sneak peek into how companies are performing. By understanding these updates, you can make informed decisions about your investments. Remember, strong profits, growing revenue, bonus shares, stock splits, and attractive dividends are usually good signs. However, it's crucial to look at the bigger picture and understand the reasons behind these numbers. So stay informed, stay invested, and happy investing!